Well, let's start with the market action. The US and China agreeing to a 90-day ceasefire on trade is lifting sentiment across the world. Wall Street has opened higher and we are seeing healthy gains. Markets across Europe are also surging, hoping that tariff tensions will now start to abate. Across Asia, it was a similar story. India, though, was the only outlier. Our markets saw muted gains in a volatile session, even as stocks rallied across China, Japan and other Asian markets. That's the S&P 500 for you, up by about 1.5%. That's the story for our markets and across Asia. So the trade truce certainly helping market sentiment. A quick check on where crude prices are currently trading. A crucial meeting of the OPEC is scheduled this week and there are expectations of a price cut. Meanwhile, Qatar has decided to exit the OPEC starting next year to focus on gas production and increasing output. 61.96 up by about 4%. That's Brent. The dollar rupee 70.45, and that's the bond yield for you. Well, that was the market action, but on to the top corporate story this evening. In a deal worth nearly 32,000 crore rupees, Hindustan Unilever has decided to merge GSK Consumer's healthcare business in India. The country's top-selling malted milk drink, Horlicks, will now be added to HUL's portfolio, along with brands like Boost, Maltova and Viva. But that's not all. HUL will also add brands like Crocin, Eno, Sensodyne to its kitty. Nisha joins us now with the details. Nisha, you broke that story. Take us to the contours of the deal.
It's a hotly contested battle to get the big Horlicks boost, which HUL has won against another multinational, Nestle. Now, big boy Unilever gave the final push to clinch this deal against an all-cash offer, which was given by Nestle. Now, HUL put forth its richly valued share in a share swap transaction and gave a higher valuation than its closest competitor, and the owner of Horlicks, GSK Consumer Healthcare, is sold for 31,700 crore rupees. Now, GSK will get 5.7% stake in HUL post the merger, and GSK shareholders will get 4.39 HUL shares for every share of GSK Consumer Healthcare held. Now, not just this, Unilever will also give a cash amount of £566 million or $720 million for Horlicks brand bought overseas, as well as the Bangladesh unit and some of the other overseas businesses. Now, as part of this deal, HUL will also use its strong distribution network to sell GSK's over-the-counter products for 5 years. So that got GSK Pharma stock also soaring in the trade in the last few minutes. Now, it's a large global deal worth over $5 billion to be completed in a year's time.
We will increase penetration with special focus on rural markets and emerging channels, and expand our offerings to the fast-growing premium segment. There will also be focus on looking at future-ready formats in line with consumer trends. Our direct coverage is at 3x GSK, and our tech-led capabilities will be a growth multiplier. On the cost side, we see significant benefits across the value chain, and the transactions will be margins and EPS accretive to HUL. Our F&R business post the proposed merger will cross the 10,000 crore mark, making us one of the largest players in the country in the F&R space. We expect the transaction to be completed by December 2019, subject to necessary regulatory approval.
This is a great deal for GSK PLC shareholders, but also importantly, GSK Consumer Healthcare shareholders here in India who are getting a premium. And also Unilever, and Hindustan Unilever is a fantastic company. Clearly here in India they have a very famous heritage and fantastic distribution capabilities. So we're delighted, having owned these brands for over almost 100 years, to divest them to Unilever and Hindustan Unilever, and we hope they can take them forward for the next 100 years.
Well, that's the big corporate story. HUL and GSK, a win-win deal is what most analysts say. But from the FMCG space to the pharma space, some pharma shares tumbling to fresh 6-month lows today. This after reports suggested that market regulator SEBI is all set to reopen an insider trading case which dates back to August last year. SEBI initiated this action allegedly after a whistleblower informed the exchanges about lapses by promoters and other entities. Earlier today, founder Dilip Shanghvi, who was on a conference call with Sun Pharma's investors to assuage their concerns, said that the company is not aware about any whistleblower complaint and went on to add that the company follows the highest level of corporate governance. Let's go across to Archana Shukla. Archana, what has been the reaction, if any at all, from analysts that you may have spoken to on the clarifications that have come in from Sun Pharma? Did the company adequately address the concerns that have been raised by those reports as well as by investors? I spoke to a couple of analysts after the call. There have been certain more queries that they are writing into Sun to get more clarification. There still needs to be a little more clarification. But if we go by what Mr. Dilip Shanghvi said, one, that he's not aware of any whistleblower complaint, and they have not received any query from SEBI as far as any investigation or reopening of a insider trading case is concerned. But he also went on at the same breath, said that if it assures the investors more, if it brings more transparency, we are willing to and we are open to relook and change the arrangement of certain businesses. That somewhere indicates, the concerns that have been raised in the whistleblower letter and the questions and the concerns that have been raised by the analysts and investors. Most importantly, three large bits that he spoke about. One was in Aditya Medisales, the company that handles 100% of the domestic sales for Sun Pharma in India. That company has become a related party last fiscal, and there were lots of concerns and questions raised on that. While Dilip Shanghvi said that this arrangement somewhere helped the company to be more tax efficient and in turn helped the shareholders, and while the business is at arm's length, he also added that now that the investors are raising concern, we will look at a different arrangement, either by buying out Aditya Medisales or taking over the entire distribution for the company themselves. That was one. While talking about audit firms, Walia and Timbadia, where there were concerns of SEBI investigation, and this audit company audits certain small subsidiaries of Sun Pharma. While Dilip Shanghvi said that, these subsidiaries are really small and non-material in nature, he also added that we would look at, adding additional audit firms to look into these subsidiaries if it increases transparency. While he agreed that loans, to employees, which are the non-related parties, has significantly increased in the last fiscal, he also, said that we will, relook at these issues more in more detail and in depth if it assuages the investor confidence and if it brings back investor confidence into the company. While talking about involvement of Mr. Sudhir Walia, who's also a director on the company and he's brother-in-law of Mr. Dilip Shanghvi, he said that his involvement only relates to guiding the company on tax planning as far as some business strategies, but there is no operational involvement in the company. So, if you go by how Mr. Dilip Shanghvi conducted the call, he did agree on certain aspects of, investor concerns, and he was willing to relook at those concerns. While there were others dealing with, loans to Suraksha Realty, guarantees to Suraksha Realty, where he said nothing like that was happening. So he was certainly addressing the concerns of the investors, but analysts have much more questions on their minds.
Let me reinforce that we follow high level of corporate governance at Sun Pharma, which is expected from a global company of our size. We are constantly evaluating how to further strengthen our corporate governance to meet investor expectations and also changing regulatory environment. We had issued a broad clarification on these issues to the stock exchange some days back. But based on the feedback that we've received, we feel that more clarity is needed.
Well, that's Dilip Shanghvi there addressing investors in a conference call, also suggesting that if need be, then some of those transactions can in fact be reversed. Not yet, but if pressure continues from investors, it is a possibility that they could consider. Now, in a bid to meet the 3.3% fiscal deficit target, the government plans to tighten its purse strings. Data released last week showed that the centre has already breached 104% of the full-year fiscal deficit target. Remember, last October, it was about 89%. The government is hoping for higher direct tax collections, expenditure savings and a subsidy rollover to offset the shortfall in GST collections. Sapna Das, who broke that story, joins us now. Sapna, take us through what the strategy is going to be on part of the government to get to the fiscal math.
Well, the government is looking to manage the fiscal deficit target of 3.3% by a combination of expenditure savings, subsidy rollovers, also looking at plugging the revenue shortfalls by using the GST composition cess kitty, and possibly also looking at a higher than budgeted direct tax mop-up. So, this is the broad strategy as of now. But in terms of what the national savings on expenditure side could be, we're given to understand that they may be in the range of 20 to 25 odd thousand crores in this current financial year. Apart from that, we are also given to understand that all the additional subsidy demands that have come in, especially on LPG and kerosene side. For example, at least 10,000 crores out of that, that kind of payment will be pushed over to March FY19. That may not happen in the second supplementary, when it comes out at the time of the winter session of the parliament. That's sometime in December. They'll push that to March. The remaining amount, the remaining unpaid, subsidy amounts will be rolled over to the new financial year. Apart from this, there'll be a reassessment of revenue targets sometime Q3, revenue as well as expenditure targets. So that will give them a better sense as to where they are, where they stand in terms of the broad fiscal maths. The non-tax revenues are also very crucial over the next 2 months, and this will include your disinvestment receipts, how they are going to pan out basically. So that's one pressure point in terms of revenues. The other big pressure point in terms of revenues, of course, are the GST collections. That has well been below the strike rate for quite a long time. 6 to 7 odd thousand crores is the monthly gap. That is what we're given to understand. So if you calculate all of that, you're looking at a big number by the end of the financial year, 80 to 90 odd thousand crores. It could be even in that much of a range. But is that something the government will sit with? Very unlikely, because here this time, for the first time in this financial year, they may have the option of dipping into the unused cess amounts which are there in the composition cess kitty. We're given to understand that as of October, those numbers were somewhere around 55 odd thousand crores. The budget target is to step it up to 90 odd thousand crores, and the centre has the power legally to retain 50% of that. The only caveat on that side, of course, is the fact that you have to take the GST Council's nod.
All right, Sapna, appreciate you joining us. On to the auto sector now. Companies have declared their November retail sales over the weekend. It's largely a mixed picture. The slowdown was led by commercial vehicles, which have seen a fall of between 10 to 20%, but the two-wheeler and the tractor segment have outperformed relatively. Bajaj Auto, TVS Motors and Escorts were the front runners. Sonia standing by now with the detailed reading. Sonia, so some sector-specific movements seen, but commercial vehicles, the real drag.
Well, the picture does look bleak. So in the month of November, the big takeaway really is that the numbers have been weak overall, but the big pocket that has disappointed is commercial vehicles. So if you look at Tata Motors, Mahindra and Mahindra, or even Ashok Leyland, the sales have fallen quite a bit. For Tata Motors and M&M, the CV sales are down in excess of 20%. For Ashok Leyland, it's down less than 10 odd %. And, all the commercial vehicle makers indicate that there is pressure on the small operators. So the small operators' profitability has been hit quite hard. Not just that, we're also seeing demand significantly slow down in the MHCV space. The LCV space, the light commercial vehicle space, is still doing quite well. Now, in the two-wheeler space, Hero MotoCorp has hardly seen any growth this time around. But on the flip side, we've seen both Bajaj Auto and TVS Motor report good growth in excess of 20 odd %, indicating that the two-wheeler pocket is still looking good. But the silver lining really is a tractor growth. Escorts has reported a very good growth in tractors this time around. In fact, the 3-month average is about 50% higher than what they've seen in the preceding 3 months, and the management indicated to us that the going is quite good. Also, Maruti, the growth rates have slowed down substantially for Maruti. This is because of a slowdown both in exports as well as in the mini car segment. So all in all, you'd have to say it's a mixed bag for the auto sector this time around, but the big trend really is the fall that we've seen in commercial vehicle sales.
Sonia, thanks very much. So commercial vehicle sales, the big drag. Now, the government has sought the approval of the Company Law Tribunal to freeze and attach the assets of key executives who led the debt-ridden IL&FS. These include top executives like Ravi Parthisarthi, Hari Shankaran, among others. The NCLT passed an interim order directing all respondents to disclose their movable and immovable assets. Yash joins us now with more. Yash, what has transpired in court today?
Well, Shireen, let me just start with the headline here out of this long hearing at NCLT in the IL&FS matter. To start with, the National Company Law Tribunal has essentially asked all the respondents in the IL&FS case to disclose their movable and immovable assets before the court. Not just that, these assets will have to include all the bank accounts as well as lockers, not just in India, but also overseas. The second part of the order is more crucial, where NCLT has prevented all these respondents from creating any third-party rights, be it in the form of mortgage or alienating these movable and immovable assets in any fashion. Last but not the least, NCLT has also prevented these respondents from selling any of their stake in any of the listed IL&FS subsidiaries. Of course, essentially these details on the movable and immovable assets will have to be disclosed before the court in the next 15 days. Who are these respondents which we are talking about? All the important and key management people as far as IL&FS and its various subsidiaries are concerned, starting from Mr. Ravi Parthisarthi, R.C. Bawa, Mukund Sapre, Sudeep Puri, Vibhav Kapoor, as well as Ramchandra Rangarajan, as well as A.K. Saha. Of course, a very crucial order which was based on some crucial arguments where the premise was the SFIO report, which essentially alleged instances of siphoning of funds, failure in corporate governance, conflict of interest, as well as undue personal enrichment of some of these key management people, as I mentioned. To mark out some specific instances, MCA also spoke about disproportionate remuneration which was paid to some of the key management people. Not just that, siphoning of funds as well as lack of management and lack of independence as far as these subsidiaries are concerned when it comes to independence in terms of their functioning. So yes, the final order essentially states that all these management people will have to disclose all their assets within the next 15 days, and the next hearing will take place on January 16th.
War, which has been on for about 3 months. A breakthrough happened on the sidelines of the G20 meeting in Argentina. China's foreign ministry claims that both presidents have told their economic teams to work towards removing all tariffs. In fact, Donald Trump taking to Twitter to say that China has agreed to reduce and remove tariffs on US cars. Currently, China imposes a 40% tariff. Trump also postponed the additional tariffs worth $200 billion, which were to come into effect from the 1st of January. Eunice Yoon reports from Beijing on the trade truce and how China is reacting to the news. Eunice.
Well, right now it looks as though the Chinese are waiting and watching to see what the U.S. does, and that the two sides are going to get into these negotiations and try to figure out whether or not they can work out their differences. So from the White House's perspective, according to their statement, the talks are going to center on some of the issues that the Americans have had problems with the Chinese, what they've described as unfair trade practices, forced technology transfers, for example, as well as non-tariff barriers and cyber theft. The Chinese, though, have are painting it in a bit of a different way, where they haven't ever acknowledged that they engage in these types of practices, and instead say that the focus of the discussions are going to be more on opening up, on market access, on ways in which they could buy more American goods. So that's more of the focus of those discussions. And because of the fact that the two sides haven't really been so aligned in the way that they are presenting this information, there's a lot of speculation now that the two sides are going to have a really rough go in trying to come up with any sort of agreement in any timely fashion to continue to keep the optimists happy that perhaps the two sides would be able to reach some sort of agreement.
All right, Eunice, thanks very much. Here's Stephen Mnuchin, the Treasury Secretary, hopeful of a trade agreement with China. In an exclusive conversation with CNBC, Mnuchin said that this is the first time that the U.S. has a commitment from China. He said he was optimistic about turning the commitment into a real agreement.
It's clear that President Trump is going to be the one who leads the negotiations, and the team will be an inclusive team. It's been a partnership of myself, Ambassador Lighthizer, Larry Kudlow from the White House, Wilbur Ross, and Peter. So this will be a team that is very inclusive. And we also have people from agriculture and energy. So there's a lot of work to do. This will be a real agreement. I think one of the things was very important is there was very specific understanding between President Trump and President Xi. And now it's the team's job to turn this into a real agreement that will have deliverables, dates, and real commitments.
One of the things that a lot of the articles are pointing out, Mr. Treasury Secretary, was there really was a change in tone, because leading up to the meeting, a lot of our officials, you and others, had been very critical of China, and China, in the same way, pushing back on whether anything would really change. Was there a tangible difference in the tone that you could pick up at the dinner?
I think so. You know, we had several meetings in advance of the dinner, but the final agreement was clearly an agreement between the two leaders, and there were no decisions made until the two leaders met. But this is the first time that we have a commitment from them that this will be a real agreement. There'll be structural issues, there'll be non-structural issues, there'll be issues on intellectual property, IP, technology, cyber, currency. And we're very clear in that we got a lot of work to do over the next 90 days.
Well, that's Stephen Mnuchin there joining us now to discuss this further. Ina Tangent, political and economic affairs commentator, joining us from Beijing. Ina, I appreciate you joining us. We just heard the Treasury Secretary of the US there saying that there will be deliverables, there will be dates that will be put forward, and that President Trump will in fact lead the negotiations himself. You know, I'm taking a look at President Trump's Twitter feed, and he talks about the fact that US-China have taken a big leap forward. He talks about his relationship with President Xi. He talks about agriculture and the fact that China will start to import agricultural produce from the US. This almost makes it seem like this is a done deal.
Well, I think there are three narratives going on right now. You have the Chinese narrative, the statement they put out that talked about consultation, one China, all sorts of things, but quite different from the White House communique. And what's unusual about that is generally after the meeting, they'll hammer out a joint communique. In this case, they didn't. The third narrative, of course, is Donald Trump, who even contradicted the White House narrative. He mentioned things that were not included, including this idea that China was going to drop all tariffs on U.S. cars being exported to China. There's nothing on the Chinese side of that, in fact, and there's nothing in the White House things. So it's difficult. I would agree with Eunice. There's a sense here that there's a very, very wide gap. Now, when you analyze this and you're looking at this from a business perspective, you have to ask a question. Is Donald Trump's aim to contain China, in which case this is going to be a very, very long-term situation, and this is just a temporary truce? Or is it really about solving the trade deficit, in which case this could be resolved? If you know the answer to that question, you have a pretty good idea of what's coming next.
Well, I don't know if you do have the answer to that question, but what would your best bet be, Ina? Is this about containment or is this about the deficit?
Well, I mean, it's very interesting. There's a tug of war within the White House. There are those, almost all of them believe that China needs to be brought into the liberal, democratic, capitalist world order. But there's a real thing. So if you look at Lighthizer, Miller, Navarro, and Bolton, they believe that China has to be contained and that the U.S. has one opportunity, that is now, to rebuild the world around the United States. And that would mean that literally the United States would be the hub, and that there would be a spoke, which would be a bilateral deal going out to every country in the world. So imagine it like a bicycle wheel with many spokes going out to different countries. I don't think that China shares this view. I think many other countries do not share this view. This is not just between China and the U.S. Remember, everybody else has felt the wrath of Donald Trump in terms of tariffs, especially on aluminum and steel. So I do believe that Donald Trump has a lot of sympathy towards the view that he has to be a strong man and reform the world around the U.S. I think that is, in fact, the answer, and that unfortunately means that this is going to be a long, drawn-out process. Expect a lot of volatility as we come up to the 90 days. Remember, last year, they had 100 days to come up with it. The difficulty there is that China has a different economic and political system, and that is not something that any country is going to reform in 100 days, even under the pressure of the world's largest country.
Oh, you're absolutely right on that. In fact, I go back again to President Trump's tweets, and he says, President Xi and I have a very strong and personal relationship. He and I are the only two people that can bring about massive and very positive change on trade and far beyond between our two great nations. The solution for North Korea is a great thing for China, and all to the point that Inar was making. But Inar, before I let you go, on the issues that are on the negotiating table, from tariffs to agriculture, where do you really see, China not backing down?
Well, they can back down on state-owned enterprises. I mean, and they're not going to back down on their political system. The one-party system is what they have been successful using for the last 40 years since the opening up. In fact, this is the 40th year of their anniversary, and they look at the progress they make. So they're not going to abandon their political system nor their economic system. Now, on the other hand, they are rapidly opening up. That has been speeded up. And there's a question in people's minds. Are they responding to the U.S., or they simply see that the long-term situation requires them to replace the business that they believe is going to be irretrievably lost if this war continues?
Inar Tandon, always a pleasure. And as Inar was pointing out, it's a very different statement that's come in from the White House, different to what is coming from Chinese state media. There is no joint communique. And of course, President Trump's tweets convey a very different picture as well. So we do need to fill in the gaps and the blanks, so to speak. But it's a 90-day truce, at least for now. Inar, always a pleasure. Appreciate you joining us here on CNBC TV 18. With that, it is time for us to wrap up this edition of What's Hot. Thanks very much for watching. Don't go anywhere. Up next, markets fail to sustain at higher levels after a gap-up opening. Benchmark indices